Thank you, Alex, for coming on and joining us on Proof of Words. I am, as always, your host, Patrick. And I understand that you have a kind of a deep understanding of the regulatory compliance angles around Bitcoin and crypto. So I wanted to get you on here specifically because this is probably one of the most important topics of conversation at hand today, particularly when you look at it from a Western civilization perspective. You have one regulatory agency in the United States that's basically going against all things crypto. And then you have regulatory agencies in Europe that are actually putting together frameworks for within which crypto can operate. So I guess before we kind of dive into that, I mean, maybe we can just start if you could explain kind of your journey into Bitcoin and crypto. I mean, how did this first become a topic that interested you?
Well, I'm coming from the legal background, and specifically have been working in the banking and financial markets industry for a long time. Before actually joining a number of fintechs that definitely needed quite a bit of support on the regulatory side because they were trying to resolve the issues specifically connected to the PSD2 directive. So the directive that came out in 2016 and kind of made a severe impact on the fintech infrastructure or fintech environment in Europe. So there was a lot of uncertainties and a lot of misunderstandings, I believe, in the field. And so when the legal consultants were in high demand, I decided to take a jump and kind of develop an expertise in that area. Starting from there, I became very interested, in further details and sectors of the financial industry markets, specifically, in the maybe a little less traditional, a little more non-traditional sectors that have not been necessarily covered by the legal expertise of the colleagues that have been in the banking industry prior to that. And one of the sectors that definitely drew my attention was Bitcoin and specifically, the cryptocurrencies in general. My take on it was kind of like more to actually develop, an expertise that would allow some sort of, relatively secure, positive statements with regard to what's actually required. Because I believe that, legal uncertainty has been, a huge obstacle in the process of establishing successful crypto enterprises. And so I just wanted to figure out a way to actually tell people something definite instead of always kind of like pushing uncertainties as an excuse to not having to provide a certain legal expertise that the company is just required in that situation. So that was kind of like my claim to fame to a certain degree. And so I just decided to, when fully understanding that a lot of lawyers, just didn't want to take a stand because they believed that, the situation was constantly changing. The statements of the regulatory authorities were constantly changing. There were a lot of hot issues to kind of take upon. I decided to become one of those guys that can actually provide a statement when needed. So that was my journey.
And I mean, those types of lawyers were kind of few and far between because at the end of the day, I think the first, okay, let's say crypto, it largely began as a cypherpunk movement, right? Everything was, okay, we're doing this outside of the banking system. We're doing this outside of the legal system, outside of regulatory, outside of compliance. We don't want to work with lawyers, right? That mentality started to change, I would say, perhaps around 2015, 2016. And this was when I first started really getting into the Bitcoin and the crypto space, because I think there became the realization that, this technology has staying power, that there is something fundamentally radical about what the technology enables and how it will radically shift capital markets and how we form capital pools on the financial side, and also just the retail application usage from a app perspective. And then when you start to actually build those products and you end up having products that end up becoming retail interfacing, right? Well, regulation is kind of needed at that point. So it's interesting that shift started to occur. Now, the fun thing is that even though that shift started to occur and you started seeing people, like myself, more on the accounting side, I'm a CPA by trade, been working as an investor for the past decade. you saw people like myself in your background, the legal side, starting to kind of entertain the idea of entering that space. And I mean, I remember back during the heyday of the ICOs, right? 2016, 2017. I mean, at the end of the day, 99% of those things are and were securities. I mean, I think that that is very, very clear. I mean, one of the things that I'm particularly proud of is my firm, Iconic. Back then, we actually got a no action letter from the BaFin that they agreed that the form of art token, if the utilities that it offered, did not classify it as a security, right? But obviously, the SEC would have taken the exact opposite stance, I would imagine. I mean, we avoided America like the plague, but probably they would look at that and say, you know what, that probably is a security. And unfortunately, from a global perspective, it really does seem that a lot of regulators historically have followed the United States and what the SEC does. But it's interesting that that's changed in Bitcoin and crypto. You see regulators like the BaFin, like the FCA, and other European regulators, maybe not tier one regulators, but I mean, these are still very well developed capital markets that they're getting involved. I mean, has that kind of been your experience as well, too?
Um, I think that specifically with regard to BaFin, obviously, being a German lawyer myself, that is the
Mm-hmm.
the regulatory authority that I'm probably best familiar with. I think specifically with regard to BaFin, it hasn't been a very easy process for a lot of applicants and a lot of crypto service providers that wanted to make their business model or their concept understood to BaFin. And I mean, I feel the greatest sympathy with anyone who had to go through some sort of registration or permission application process, because I know how hard it is and how difficult it is at times to explain to BaFin what you're actually trying to do. So I think I'm coming maybe.
But what my experience with BaFin was, at least they were willing to listen. At least they were willing to have the conversation, and that's what I give them an absolute high amount of credit for. Because other groups, it's just you walk in the door and they pretty much tell you to piss off,
Yeah,
right?
I mean it's that I have to agree. I mean they are very open to new concepts. They are trying to really give it a chance. However, I believe that the biggest problem that they had back in the day, was really that they just lacked technical experts at hand. I mean, they did have some outstanding
Mm-hmm.
lawyers. I have to admit, like the lawyers were really at the top level. They have recruited a number of people from some leading law firms. However, the technical experts that would be able to explain to the lawyers and to regulatory councils what's actually the background, what's the technology behind it. I believe that that was kind of like the narrow the narrow place where they maybe lacked a little bit of proper understanding. And so
Mm-hmm.
the I don't know how long the process took in your case, but I imagine that it could have been a year easily, because all my application processes have taken maybe a year and a half around then, because it's always been like just a very challenging process. However, just like I do have to give BaFin praise where it's due. I believe that now they have also come to term and have developed a proper understanding after 4 or 5 years that the things can actually be very useful, and they can positively influence the financial markets, and they can actually provide a solution to a lot of just regular citizens that actually require some sort of financial freedom that the German banks are just not able to provide. And I mean, we don't need to go far. So it's to me, it's relatively clear that the BaFin kind of has developed itself into a real strong player on the field, and has provided a certain degree of security, and actually has been helpful to a number of legal advisors by actually setting up the rules, not just with regard to the legal regime, but also with regard to compliance and data protection issues that might come along. So yeah, I think that BaFin did a pretty solid job in the last couple of years. On the contrary, SEC, I I mean, I specifically would.
Oh, don't get me
Yeah,
started.
no, exactly. So, with regard to SEC, I think that even the clearer statement would be with regard to NFTs. How SEC is very, very clear that they don't even want to look at the details of every platform. That they just believe that NFTs are securities by definition. No matter what, they just need them, to get a license to regulate the trade, to regulate the any kind of NFT platform that has been set up and is affecting the American market. So I think that this broad approach that SEC has shown in the last years has actually really damaged the potential that American market would have had if this was not the
Oh yeah.
case. At the same time, like obviously, FTX and similar cases have shown that no matter how strict your regulatory regime might be, that there is always, an opportunity that somebody, with a lot of money would find a way around it, and then you kind of find out about what actually happened after, the damage has been done or caused. So I think that BaFin, so I agree with your thought that BaFin in this case is a lot more flexible now, that it actually sets up a really relatively high standard. I'm not sure if absolutely everyone follows SEC blindly, because I think that this opinion in general, that people understand that this kind of like very broad approach that SEC is taking, that they just want to have like one setting for everything, where they're just establishing
Mm-hmm.
pretty much every crypto platform, every NFT platform is trading securities, and we don't care about anything else. So basically, there is nothing you can do about it. That this inflexible approach has not necessarily found support across Europe. At least I don't see that clearly. But it did cause some damage, definitely, for the platforms that wanted to go to the US and wanted to open the US market for themselves. So I think that the damage is even more to the market itself than actually to the platforms, just because the platforms are just trying to go to Caymans or BVI or just the usual
Mm-hmm.
suspects, where they can feel a little more at ease or a little more secure, as opposed to the US. And so I think that the SEC politics are damaging American market more than they are actually hurting the platforms.
So I would agree with that entirely. And you're starting to see now, at least the larger platforms that have enough dry powder in their coffers, they're actually going after the SEC now. I mean, we see it with Binance, specifically Binance US. Coinbase is kind of leading the charge, I guess I would say. I mean, Coinbase has been doing lobbying down at Capitol Hill for a couple of years now. I mean, for me, it's kind of, I mean, as an American, it is disheartening to see the SEC kind of take this stance. And I completely understand and empathize with the idea that you have to have some elements of regulation. You do have to protect retail investors. And I do think that there is an element of good faith with certain actions the SEC takes in doing so. When it comes to crypto, I think is the exact opposite. I think everything that the SEC is doing in and around crypto right now is done in complete bad faith. I do not know why the SEC is taking this non clarifying position the way that it seemingly is doing. It's not willing to clarify anything. I can speculate about it. I mean, the first thing that I would say is it's probably coming down from the higher ups within the Biden administration, that they just, for whatever reason, don't want Bitcoin, don't want crypto to become what it probably inevitably will be. Uh, Take that as you will. I don't know if it's true or not. The other side of it is, I mean, we have to remember the United States is unique in the sense that it has what, 7 or 8 major regulatory authorities, whereas, for instance, in Germany, I mean, you have what, 2 or 3. I mean, BaFin itself oversees banking, commodities, asset management, securities, exchanges, right? That's like 5 or 6 different regulators already in the United States. And when you're a regulator, I think you have a bit of a conflict of interest compared to the parties that you're supposed to be overseeing and regulating, because you inherently, at least I think, want to increase your operating budget by increasing the amount of regulation or trying to grab what should theoretically be regulated by other parties. Because then you just get an increased budget from Congress. And I think that is probably the main motivation behind what Gary is doing, because if he's able to justify that everything is a security, well, okay, CFTC isn't going to get the budget to oversee crypto because it's a commodity. Now you're going to have the SEC overseeing a lot of it. Um, but it just for me, I mean, I don't know if you agree with that. It just seems like everything over there right now is being done in bad
I
faith.
think that, I mean, to me, there are maybe, granted that this definitely has a point. To me, there is maybe two other, possible components that might come into play. So one, it's relatively clear to me that the Fed is definitely playing a role because they might be trying to uphold the dollar,
The dollar.
as the only major commodity, in the sense that they try to eliminate pretty much every other currency, including crypto, as a commodity in daily turnover. Seeing that crypto.
So I 100% think that that has to be a piece of the puzzle. I mean, if I don't think people realize how deep shit the U.S. will be in if the dollar loses its reserve currency status. I mean, the country's just
Yeah.
done.
Well, I mean, I don't know if I would be so skeptical, but I mean, they do understand now that the dollar has lost a number of very strong positions that it used to have in the past. Specifically now, with a new Eastern alliance forming of sorts, including China, India, Russia, obviously, and maybe Brazil and South Africa. So the BRICS states kind of like
Mm-hmm.
just obviously trying to avoid dollar at in every opportunity possible. And obviously, we're talking about the half of world population if we're talking about the BRICS states, well, a third, let's say, but yeah, close to half. But the
Yeah.
point being that dollar is obviously losing stand, and I think that the Fed is clearly taking the position that that the SEC needs to make sure that at least on the domestic market that the dollar stays as strong as it has been in the 70s or 80s, and that these positions are not jeopardized by any upcoming currency that might become popular in the American population. And I mean, it's
Mm-hmm.
relatively clear that people are generally very interested in crypto. I mean, until today, regular people, and that's actually what's scary to the Fed, I believe, are genuinely understanding that crypto is a real alternative to the dollar. And despite the fact that that your bank account still holds the dollar, I mean, it's relatively clear to all of us in our everyday life that we're not gaining any interest on our deposits. So, and the Fed cannot change
Mm-hmm.
that. So, the interest is actually something that's hurting a lot of people, and the people clearly understand that if the value, like it's common knowledge now that if Bitcoin 10 years ago used to be $1 and now it's 27,000 or 50,000, not that long ago, then obviously it's a commodity that can grow in value. Okay, most of us have missed the train, no question there. But the point being is that it's something that you cannot just discuss through any kind of regulatory obstacles. You kind of need to make sure that it goes away so that the people don't actually have access to trading places like Kraken and crypto.com and Coinbase, so that you kind of close it down almost violently, because you don't want the US domestic market to have access to those funds. And that's kind of something where I clearly see that as a factor.
So I definitely think that that is a factor. And I mean, a little bit, I guess, if I'm going to say the conspiracy theorist in me, is that if you look at the banks that were recently shut down by the FDIC, or rather the FDIC took over, every single one of them had deep ties to crypto. Because while I agree with your assessment that, hey, if you want to come after Bitcoin, you want to kill crypto. I think the government, I think the regulatory agencies, if that truly is their objective, I don't necessarily think it is, but if we live in a world where we say it is, well, you can't kill it. They're not that stupid to think that they can stop Bitcoin. You can't. Nobody on earth can stop Bitcoin, but what you can do is restrict people's access to it. And you do that via the exchanges. But even more importantly, I think you do it through the banks, because at the end of the day, until or if Bitcoin and other crypto becomes more of a commodity that is easily more directly accessible and used for payments, like the way that we hope Bitcoin inevitably one day becomes, you still need an on and off ramp. And that's not just an exchange, it has to be the banks themselves. And if you restrict that, and it seems as though that was the beginning of, I forget who coined the term, but what do they call it? The great chokehold or something like that. Uh, I mean, it seems as though that is potentially the motivation there.
Well, I mean, if I may draw the parallel to Europe, on the other hand, like, and then I think that explains quite a bit, like, maybe a more understanding, more, more approachable strategy of European regulators, including BaFin, towards, crypto is probably
Yep.
based on the fact that, in Europe, the situation is quite different. People in the innovative space, not necessarily just in crypto, but like in a lot of companies that are trying to establish innovative methods of operations and are just pursuing maybe newer technologies. A lot of them are looking to Lithuania, Estonia, and other similar countries where
Mm-hmm.
people are aware that it's kind of like crypto paradise of sorts, and that also fuels the new technologies, the boom of the innovation that they're currently experiencing, etc. And so Germany does want to have a stake in that game where they want to say, okay, we want to be seen not necessarily as a breakthrough in the whole story, but we want to be seen as a supporter. We know that we're not necessarily the most popular destination for innovative enterprises trying to set up a foothold in Europe. So we do want to use crypto as one of the arguments for people to actually come to Germany to establish presence, to build up partnerships with both Eastern, say Asian and North American technology providers that can benefit Germany by a mile. So I think that that's exactly the
Yeah.
difference. So we consciously understand that to us crypto is a benefit, and that's something where we can definitely gain ground. On the other hand, to me, the Fed is clearly saying, to us, benefit is something that's jeopardizing the dollar. And to us, like everyone pretty much knows that euro is an extremely weak currency that people, don't necessarily trust much, especially, like after the multiple crises that, obviously Greece, Italy, Spain, countries have gone through. So people know for a fact that the European Central Bank is an extremely weak institution, that that euro is not
Mm-hmm.
necessarily a currency that you can necessarily trust in or confine in, and so that's why crypto is something that people are putting generally their trust in, and the banks follow suit. So just to give you an example, like obviously SVB is a good example. They were deep into crypto, and there was a
Yep.
huge crisis. And the Germans are kind of like maybe pushing on the other end of the scale, where they're saying like the chances that a crypto bank in Germany would go bust is a lot lower than a regular bank. The regular BaFin regulated bank would go bust. So we would much rather see the rise of crypto than actually trusting into the euro as our staple. So I think this is something that kind of like clearly shows that the Fed plays a super, super important role in the whole SEC strategy.
I mean, and at the end of the day, they're supposed to be independent, but we know that's not how these agencies actually work. There's a lot of cooperation between the U.S. regulatory authorities there. I mean, it's kind of interesting you say that, because, I mean, when you look at Christine Lagarde and a lot of what she says around CBDCs, a lot of what she says around crypto, I mean, she basically just thinks crypto is vaporware, more or less. She sees zero value in it whatsoever, but she is seemingly, at least from what I can tell publicly, a huge proponent of CBDCs. But that seems as though, in contrast, for instance, to what you're saying, other regulatory agencies in Europe look at crypto as, like, they see crypto as a viable alternative, whereas the ECB actually really just wants to have their own
I
digital
mean,
currency.
quite
Yeah.
frankly, ECB is a laughingstock of every major bank in Europe. Like everyone knows that. Despite the fact that Christine Lagarde, I mean, I know her very well. Christine Lagarde was actually a managing partner of Baker McKenzie before she switched into the banking industry or into the IWF. So she's not even a banker.
And this was the legal firm you were with,
No,
correct?
no, I was at Gibson Dunn, but it doesn't matter. Like it's a
Ah,
similar
okay.
one. But she was one of the key players, and so obviously highly, like, you don't become a managing partner of a law firm for nothing. However, remaining a lawyer at heart, she's just so cautious and just so, I believe, so restricted, that everyone pretty much knows that ECB would cut its arm off before doing something innovative or similar, or something that might make sense to actually push the risk side a little bit, but at the same time providing a huge benefit. And unfortunately, she is just a continuation of a number of ECB presidents who have been just a catastrophe across history, pretty much. I don't think that there was
Mm.
one good one in the past, and therefore, like, nobody's surprised, so nobody really thinks that ECB has anything to say. So that actually, on the opposite, the guy who is running the German Fed, Bundesbank, he used to be
Hmm.
an absolutely outstanding advisor to Angela Merkel, in the past, and he was the guy who created a lot of just very interesting kind of like banking and cryptocurrency strategies that have been followed pretty closely by a lot of central banks in Europe. So I think that I think the disconnect is that despite the fact that ECB is headquartered in Frankfurt, the Germans are pretty much the strongest opponents of Lagarde that you can find, and I think she pretty much realizes that. So I don't think that and I fully agree with you that Christine Lagarde couldn't be more opposed to crypto. However, it's not something that the Germans would necessarily treat as a guidance of sorts. I think they want to stay as independent from ECB, despite the regulatory aspects of having to have the same strategy in place for all members of the
Hmm.
eurozone. That I think that the concerns for the future of euro are absolutely justified. I have to admit that.
And I think that I agree with that. So, like, my question there would be, so there's at least, I mean, granted it is speculation, but there's at least a rationality that we can arrive at as to why the Fed doesn't necessarily want Bitcoin and crypto. It's to protect the US dollar. I don't necessarily think that that holds with the euro, right? I mean, the ECB, like you said, everyone knows that the euro is not necessarily a very strong currency. Everyone's really skeptical of it right now. I mean, so what is the logic then, or is there any logic in being very anti-crypto if you are Lagarde, if you are the ECB?
Um, well, I mean, I'm afraid I'll have to repeat myself. Obviously, the the run into crypto, or I mean, maybe it's a little bit more to that. So it's not just the American factor. So trying to make the euro,
Mm.
still the backbone of European economy. I mean, this plan has clearly failed. So that was their original idea of 2001. This plan has failed by as much as it could. So basically, the idea that the euro, will barely not regain its position, even if they, forbid crypto ownership, is pretty clear. However, they have to put up, a show and make sure that the ECB still holds euro as something so valuable that there is a need to fight for it. I mean, ECB is a very large organization. They have a lot of employees. They have a lot of expenses, and the European states, do need to keep paying them for something.
Hmm.
And obviously, without the euro, they don't have much going for them. So that's definitely a factor. On the other hand, I think that Lagarde is truly scared that, because she clearly to me lacks understanding of the crypto platforms and the crypto functioning per se. She's just generally scared of the effects of FTX and the like, where she clearly is scared that, something might implode in the Eurozone, causing, huge losses, et cetera, et cetera. And she's just scared that the crypto might prove itself and a non-viable alternative to the euro, and then she would obviously have it on her plate, having to deal with a bankruptcy of major proportions, um, because learning from the experience of 2008, we all know that when America gets a cold, Europe starts to sneeze. So obviously, Lehman Brothers and the like are still in the memory of everyone. And I was actually in the aftermath of that. I was actually the one in charge of
Oh, wow.
West LB being dissolved. So I was one of the councils working on the dissolution of West LB, which was the security guarantor for Rhine Bridge, which was a huge financial instrument put up by, it was kind of like an asset-backed security, instrument put out by a small German bank called IKB that in the aftermath of the crisis was taken over by Lone Star. So I remember that story very, very vividly. And I know for a fact that that's Lagarde's and ECB's largest nightmare, because back then they've just failed across the line. And would Lone Star not have jumped in and similar funds or similar PE structures in place, the German economy would have been destroyed on a much larger scale. So I think that what Lagarde is really scared of is that, so to speak, crypto might cause a similar situation to 2008, 2009, and she wants to prevent that at all costs. And I think that she believes that being overcautious in that connection is actually what can, it's always the better way. As a typical lawyer, even if you overregulate, the positive outcome of that, obviously having the opportunity to prevent major damages, obviously outweigh the advantages, of having some sort of, innovation or, new technology, new crypto infrastructure put in place. However, I think that in today's world, this just doesn't work anymore.
See, and I view it, I mean, so that's probably true. And there is merit to lawyers and regulators trying to be overly conservative. I'm an investor. I work in Bitcoin and crypto. I work in tech. So I'm more on the side that there is more upside to enabling the innovations that this enables, or enabling innovations that general tech enables, and that regulators need to be open to that. But I also understand that in these types of world where you don't necessarily understand what it is that you're regulating anymore, it takes time to grow, to learn, to adopt, to develop the technical knowledge to understand if and how and when and how you actually do regulate that. But see, this is where, like, okay, Lagarde doesn't want FTX to happen on European shores, right? But I mean, this is where I do think that, so FTX wasn't necessarily a crypto problem. The way I look at FTX is FTX operated, let's be honest, pretty much a lot like a bank by using depositors' assets to buy other yield generating shit assets as collateral, and just didn't have a correct basket of liquid assets in a pseudo fractional reserve sort of capacity to actually pay off depositors whenever there was a run on the bank. So, that's where I don't view what happened with FTX as necessarily something systemic within crypto, and that's something that is systemically negative within crypto. It literally is what happens with banks. The fix for is a more transparent, more open, more peer-to-peer financial system. And what bothers me is that bankers don't necessarily see it that way. If we can have verifiable custody accounts, transparent, verifiable custody accounts of exactly how liquid banks are, there would never be a bank run. We would always know exactly what assets the banks are in. It could be done in real time. We have the technology to do it. Obviously, there's massive compliance and regulatory issues we'd have to overcome before we get there. But I mean, this is where, if that's Lagarde's concern, crypto could be the answer to solve those problems. She just doesn't see that, I guess. So I know I'm going to have to invite you back on for another podcast where we can deep dive into that, because I even take it a little bit further. I think, I mean, we currently today base what we typically think of as a corporation largely based off of the Dutch East India Company. That was the first legally formed corporation, right? Similar to what you're saying now about how crypto and the technology we have could create a bank 2.0. I think, and maybe not necessarily via DAOs, I'm not 100% convinced about that yet, but crypto from a governance perspective, I think could fungibly restructure how we think of organizations or how human beings organize themselves in a digital capacity for common enterprises. So we have to get you back on so we can have a longer conversation about that in the coming weeks, because I think we can really deep dive into that topic. So Alex, thank you so much for joining us here on Proof of Words. Can't wait to have you back again.